I'm Owen Bigland. This is the Inside Edge video blog. Okay, time to do another blog every year or so. I'll do one on Vancouver rental rates, the rents that are currently being offered up for downtown Vancouver condos. We'll cover Richmond condos here. A lot of people always ask me about, do I manage my own investment properties, which yes, I do. Go back into my archives. I've done quite a few blogs over the years on how to manage an investment property, the forms that you need, running credit checks, all that kind of thing. So I want to cover a few things here, and I think you guys will find interesting here because it's been a while since I've done an update on this. So I've got some information here from my friends at Gammon Property Management. Now, they are a well-established large property manager here in Vancouver. They manage stratas, and then they also represent individual landlords to manage their rental properties. Now, I'll give them a little plug. I mean, as you guys know, I manage my own properties. There's no right or wrong. If you want to pay someone, there are a lot of companies that will manage your investment property for you. And if you want to go that route, I can't say enough about Gammon Living. I know the principals that own this company, and I've also met some of their individual property managers. I think they're one of the better companies out there for sure. I think their rates are quite good. I know their screening process that they use to get tenants, if they're representing you, is very stringent. And I just think they do a fantastic job. And I'm happy to give them a little bit of a plug. So they provide me with some of the latest rental information here, and I'm just going to share it with you guys. And this is pretty accurate. Now, keep in mind, these numbers are going to be a little bit broad because when they talk about one bedrooms, that's going to pretty much encompass everything from older 35-year-old wood frames up to, brand new boutique concrete luxury unit. So these are averages. You've got to take, the lower end with the higher end stuff, and it's a blended number here. But as I've been blogging about for a few years now, as everyone knows, if you're a renter in Vancouver, you will know that the rental rates have gone up dramatically. I talked about it earlier this year. I had a couple of tenant turnovers this year. One was in Richmond, one was in Vancouver. The one in Richmond was over 25% rent increase I had. The guy had been in there for almost just over 3.5 years. Substantial rent increase there. The one in Vancouver was somewhere around 13 or 14%, and he had been in there about 18 months, 20 months or so. So rents are going up at a pretty good pace here. So I'll give you just the numbers here, just so people realize here. So for downtown Vancouver, the average rent for a studio apartment in downtown Vancouver is $1,975 with parking. $2,000 for a studio. The average one bedroom now downtown with parking, $2,350 per month. The average three bedroom is $3,675, and the average larger townhouse comes in at over $5,000 a month. And I think that's probably pretty accurate because I've got a number of one bedroom units in Vancouver, Yaletown, Gastown, Crosstown. And that's what I'm seeing too from my one bedroom units with parking in around that $2,300 mark. Now for Richmond, just throw this out, they're a little bit less. Studios in Richmond are $1,300. A one bedroom is $1,725. Two bedroom, $2,300. Three bedrooms are about $2,600 per month. And again, pretty accurate. I mean, I've got some older wood frame units in Richmond that I'm getting $1,400, $1,450 for. But they're 30 years old, 600 square feet, renovated, parking, but not secure parking. So I think around $1,700 a month is probably spot on. These guys at Gammon know they've got a lot of properties they're managing, and they can come up with an average rental price here. The other thing, the information they gave me was on Airbnb and how the city is really cracking down on Airbnbs these days. Apparently for 2018, there was 363 investigations into illegal Airbnb. There was 304 warning letters, 126 tickets issued or fines, and 10 or 12 licenses permanently revoked. So I blogged a bit about this in the past few years. I still see a ton of Airbnbs on Airbnb for downtown Vancouver. Now, Most of them are going to be probably illegal, because I don't know very many stratas now that have not passed an Airbnb bylaw forbidding Airbnb. I know of a lot of stratas that will allow 1 month furnished rentals, either through Airbnb or Home Away or whatever. 1 month is the minimum. Some are 6 months, and some stratas now 1 year minimum lease. But all of them pretty much that I can think of, maybe some of you can comment on some buildings you know that allow Airbnb still, the strata does. But of course, it's, for the city now, you've got to be licensed, and otherwise it's illegal as well. But most of it's cut off from the stratas. They're forbid it. But they're still out there. Some of them, I guess, are doing it and figure the fines or the risk of getting caught is worth it from the revenue they're bringing in. But I think that the number of Airbnbs has probably gone down a fair bit for downtown Vancouver. Of course, it's still legal to rent a bedroom or 1 bedroom as long as the owner's living in it. But you have to be licensed for Vancouver, as you know. So I think the numbers have gone down quite a bit. I know I go down to California quite a bit, 2 or 3 times a year. And I used to stay at Airbnbs occasionally I always stay in Venice, but I also used to stay in Santa Monica. Santa Monica, the city of Santa Monica, is completely outlawed Airbnb. You can still find a few illegal ones on Airbnb there on the outskirts of Santa Monica. But what that did is it really jacked the prices up for Venice. I'd say the prices that I'm paying in Venice, California on my Airbnbs are up 50% in the last 2 years, because they've all moved from Santa Monica. But the bottom line is yes, the city is really coming down on these Airbnbs. They're on Airbnb, they're looking at units, checking them with the stratas and the addresses, and issuing tickets and inspections on these. And again, most of these I think are illegal from a strata standpoint. They've passed bylaws to restrict it. Now, as far as the rental rates go, again, the rental rates have been going up dramatically. Here's a little takeaway that I'll give you from my own portfolio. I've noticed that the tenancy turnover, as these rental rates have been going up dramatically in the last 4 or 5 years, I'm noticing it's a double-edged sword, really. The good side is that I've got much less tenancy turnover. And I never really had a lot of tenancy turnover. For the most part, my units are generally new or renovated. I keep them up, good buildings, good location. Some have parking, most have parking except for a few. And they're in areas like Olympic Village, downtown Vancouver, Gastown, and then I've got some stuff in Richmond. So my tenancy turnover was always fairly low, but I'm noticing that that's getting lower. And I think part of the reason is I've talked about it before, I tend not to raise the rent with my tenants. I screen them. I want good quality tenants, and I like to keep them there. Because the work for a landlord, as you guys will know, is getting a new tenant. It's a lot of work. You've got to meet with the tenant, get a agreement to end tenancy signed. You've got to work out a deal where you can show it. Hopefully they'll keep the unit clean for a week so you can show it. Schedule some showings, give out some applications, run some credit checks. Then when you finally do get a tenant, fill out a new tenancy agreement. It's a lot of hours. Some people want to take that on, some people don't. So for me, managing my own properties, I want to try and mitigate that or keep that to a minimum. So I tend to get good tenants in there, screen them properly, take my time, and then if they're not bothering me and they're good tenants and they're taking care of the place and paying the rent on time, I don't raise the rent. Now it's a double-edged sword a bit too, because the way rents have been going up, you had a situation like I had in Richmond here where the guy had been in there 3.5 years. He was paying about $380, $400 below market rent by the time he moved out, which is a lot of money. My downtown one, even after 18 months, was paying about $250 below what market rent was. So it's a bit of a double-edged sword there. Do you raise rents every year, which you can do? Or do you just, if you get a good tenant, keep them in there and not raise the rent? I'm going to still stick with not raising the rent, but I'm going to monitor it. Because as I say, if they start staying in there for 4 and 5 years, then it's kind of offset by not being able to get anywhere near the market rent. Now, of course, when they move out, I'm free then to jack the rent up to whatever market is. And that could be $400 or $500 more than what the previous tenant was paying. And you see, People know this. The tenants, if they're smart, they know that rental rates are going up. And if they get a landlord like me that's giving them a good break on the rent, they don't want to move because they know if they do, to get into their new place, they're paying market rent, which might be $300 or $400 more a month. So it's a bit of a double-edged sword. It's something that I'm going to keep an eye on moving forward. Now, as far as managing your own properties, I'll finish it off with, I manage my own properties. It's not as much work as people think, but it does involve some work. And that's why the work though comes in getting the tenant, screening the tenant, showing it, giving them the application, running the credit check. After that, generally, for most of my properties, I don't have to do a lot. Most of my tenants are doing automatic deposit into my bank account. Some I get post-dated checks from. Every now and again, you're going to get the dishwasher goes on the fritz, or you got a leaky tap, or the toilet's not working properly, and you've got to send one of your repair guys out to fix it. But for the most part, and that's the advantage of having relatively newer units or units that are at least well maintained. Once a dishwasher gets past 10 years old and it starts to go, I don't even bother fixing these things anymore. I just replace it, put a new dishwasher in. After 15 years with a washer and dryer, hey, when it goes, just replace it. Appliances are getting cheap, and it's going to save you a lot more money in the long run as opposed to having to get someone out there to fix it all the time. So there's little ways you can do to minimize how many calls you get from your tenants. Now, for most people, they're living in the Lower Mainland, and I always recommend that if you're going to buy an investment property and you want to manage it yourself, you should be pretty close by. You don't want to be buying a property out in Mission if you live in downtown Vancouver. You could, but realize if it's brand new, then maybe you're going to be okay and you shouldn't have a lot of trouble there. But if it's an older unit and you think you might have to make a few trips out there every year, it could be a drag. You're looking at 2.5, 3 hours round trip. I like to keep my properties within a 30, 35-minute drive of where I live. That's just me. Now, if you don't want to take those things on, or for some of my clients that live out of the city or live out of the province, or even I've got many investor clients that live out of the country, you have to hire a property manager. Now, the nice thing about hiring a property manager is they're going to take care of everything. They're going to screen the tenants when you need a new tenant, do the credit checks, put the tenant in, collect the rent checks, take their cut off the top, and send you the difference. If the toilet breaks or the dishwasher goes, they will come in, bring in their own repair people, fix it or replace it, and send you the bill. They're going to take care of everything. But it comes at a bit of a cost, anywhere from 10, 11% up to as high as 15 or 16% per month. And generally with most of them, that varies between property managers, the monthly fee. Generally though, to get a new tenant, it's pretty standard. It's half of 1 month's rent. So if you're charging $2,000 a month, they're going to charge you $1,000 every time you need a tenant turnover to screen and show the unit. Another advantage is with running a property manager, it's carefree, you don't have to worry about it. That expense is deductible. It's another charge that you can deduct from your income on the property, so it's a tax deductible expense. So you get a bit of it back that way. So there's no right or wrong. For many of my clients though, if they don't live near the unit, you pretty much have to hire a property manager, or if you're living outside BC or outside Canada. I would say, I'm always, when people ask me, want to buy an investment property, should I take it on myself? I always say, try it for sure. Give it a year or two. Get your first tenant in there. After a while, if you don't think it's for you, but I find that it's not as much work as people think, especially if you don't raise the rent every year on them. You do a proper job of screening them and keeping those tenants in there. I've got tenants that I haven't heard from in years. Checks keep coming in every month, automatically deposited, and I haven't heard from them in over 2 years, which is great. Might be paying a little less than market rent, but hey, I'll make up for it when eventually they do give me notice, which they always do one day. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.